This fall, Washington voters will decide the future of the state by voting yes on November's ballot initiatives. Today we're talking about I-2109, repealing the capital gains income tax. In 2021, Olympia introduced an additional 7% tax on the sale of businesses and other capital gains income over and above the federal capital gains income tax that everyone already pays. The proponents of this tax argued that it would only affect the rich, that it would be stable because the rich wouldn't move, and that the revenue generated was needed to pay for schools and early childhood education. However, as Mark Twain once said, a half-truth is the most cowardly of lies, and to label these claims as half-truths is being generous. Today, we aim to reveal the whole truth about why repealing the capital gains income tax is essential for everyone, and how the tax came into existence, and how we can afford to repeal this tax while still maintaining the programs it funds, thanks to Washington State's $19 billion surplus over the last 5 years. Half-truth number 1, it only hurts rich people. The whole truth is it only hurts rich people for now. The opposition argues that you don't have to worry about paying this tax because it only affects the rich. While this might be true for 2024, it's clear from public records that Olympia's majority party leadership intends to expand this tax to include everyone, and they've already taken steps to do so. In April 2018, years before the capital gains income tax became law, Senator Jamie Peterson, a member of the majority party leadership, repeatedly stated that passing a capital gains tax would make it possible to enact a statewide income tax without a vote of the people. He reiterated, saying, "I personally believe that adopting a capital gains tax is one of the best things we could do to help advance the possibility of an income tax in our state." In 2022, after the capital gains income tax had passed, Senator Peterson stated in a closed-door meeting that we've got to figure out how to have an income tax in our state, and he hoped the capital gains income tax would be that pathway. Then, in 2023, less than a year after the capital gains income tax was enacted, majority party legislators proposed Senate Bill 5335, which creates a tax rate of 8.5% on just $15,000 worth of capital gains sales, and a 15.5% tax rate on $250,000 of capital gains sales. Capital gains apply to more than just stocks. They include retirement plans, homes, cryptocurrency, and almost any investment you sell for more than you bought it. Currently, the legislature has made an exception for retirement plans and homes, promising they would never tax them. But Olympia's never met a tax that they didn't want to increase. In fact, until 2021, the state of Washington advertised that we didn't have a capital gains income tax as a way to encourage innovators and job creators to start their businesses in the state. Half-truth number 2, this doesn't hurt small business owners. The whole truth is it doesn't hurt small business owners as long as they never sell their business, grow their business, or try to retire. Imagine you've owned and operated a small business in Washington State for the better part of your career. Your plan has always been to sell your company and retire with dignity after decades of hard work. You have faithfully paid your employees well, and you've funded their benefits. You've always paid your business and occupation taxes, retail sales taxes, personal property taxes, and your public utility tax for all the years that you've operated your business. You've taken a smaller paycheck, maybe not even taken a salary during bad years like COVID, just to keep the company afloat. Meanwhile, politicians in Olympia devised a way to get more of your business just as you're nearing retirement, forcing you to continue working. The reality is most small business owners aren't rich. They own the coffee shop in your neighborhood, the hardware store around the corner, or the auto repair shop down the street. The capital gains income tax has a chilling effect on new local businesses and on people coming into the state to turn their dream into the next great business in Washington. There are already several regulations, taxes, and barriers to opening businesses here, and that directly affects the opportunities available to Washingtonians. When fewer businesses are started in the state, we lose out on jobs, on opportunities for growth, and income to fund various programs that benefit all Washingtonians. Half-truth number 3, rich people won't move because of taxes. The whole truth is rich people won't move because of taxes, except they do. Washington State Senator Frame has been arguing that rich people won't move because of tax reasons. They'll only move for family or for job reasons. In 2023, 1 year after the capital gains income tax took effect, Jeff Bezos, the founder of Amazon, famously said he was moving to Florida to be closer to his mom. Just as Senator Frame predicted. Open and shut case, right? Not exactly. Bezos' activity leading up to this relocation announcement is the key. Every year from 2012 to 2021, Bezos sold shares of Amazon, and typically he sold shares 2 or 3 times per year. But that all stopped in 2021, the same time the capital gains income tax was passed. Bezos didn't make a single stock sale again until he relocated to Florida, which does not have a capital gains income tax. Since relocating to Florida in 2023, Bezos has sold a record number of Amazon shares. It would have cost Bezos nearly $1 billion to stay in Washington state, or about $500 million per year. But sure, tax policy had nothing to do with him moving. Income tax supporters say, no problem. Jeff Bezos is far from the only billionaire in Washington state. But what happens if more leave? Will the government cut the programs? History says that's unlikely. Since 2010, the state budget has increased 150%, despite the population only increasing 15%. As more people follow Jeff Bezos and Olympia refuses to end programs even if they aren't working, where will they turn? Remember when Olympia pinky promised they're only going to tax the rich? The easiest thing to do will be to reduce the threshold from, say, $250,000 to $15,000, and maybe get rid of the home exemption while they're at it. But we're just guessing here. Half-truth number 4. Olympia says it needs this money. The whole truth is Olympia wants this money because they foolishly spent the money that you already sent them. Olympia says this tax will raise $5 billion over the next 6 years, but that number will likely be cut in half again because the wealthy in the state aren't sticking around to be taxed. When the capital gains income tax was first passed, it was sent through the court systems, and many people thought that it would be ruled as an income tax, as it is in 100% of other states with a capital gains tax. However, after months of court cases and delay, the tax was ruled not income, which was unprecedented. And when the Constitution was no longer upheld and the successful in the state were taxed so aggressively, the amount of money brought in by the second year of collection was slashed in half. But what they aren't telling you is that Washington state has had a budget surplus of $19 billion over the last 5 years. You heard that right. $19 billion. We could eliminate the capital gains tax and still have the funding to pay for all of these new programs. See, Olympia doesn't have a money problem. It has a priorities problem. The Washington state education system receives $30 billion in funding every year. And that money comes from property taxes, marijuana taxes, labor and industries taxes, lottery taxes, the tobacco tax, local levies, and more. All of that funding means the state is paying about $18,000 per student to educate our kids. It's interesting to note, however, that the average private school tuition in Washington state costs $13,000. So the next time you read a story about test scores dropping and dropout rates soaring, ask yourself if your child is receiving a private school education with all the money that's being given to schools. Half-truth number 5. The money is for the children. The whole truth is that the money is for the children because Olympia screwed up the system. The opposition claims that if we cut this tax, it will eliminate funding for early childhood education, commonly known as daycare. However, this argument overlooks the root cause of the high cost of daycare in Washington state, which ranks 3rd highest in the nation. Over the past 15 years, the state government in Olympia has created significant barriers for in-home daycare centers. This has led to 3 major problems. First, a decrease in providers. Despite an increase in total daycare capacity over the past 12 years, the number of childcare providers has decreased. This is due to the closure of in-home daycare centers and the opening of larger centers. From 1996 to 2023, nearly 5,600 family childcare providers closed. Second, the creation of childcare deserts. The centralization of capacity at larger centers has led to a decrease in the number of childcare locations, creating childcare deserts. Some areas across the state have seen decreases in daycare and in reduced overall capacity. And third, an increase in cost. Center-based slots now make up 80% of the total childcare capacity. The cost of care at these center-based programs is significantly higher than family childcare homes, making a smaller percentage of the overall capacity affordable for families. We must address these underlying issues rather than focusing solely on funding. By reducing the barriers for in-home daycare centers and promoting a diverse range of childcare options, we can ensure affordable and accessible early childhood education for all families in Washington state. By now, it's clear that you can't just throw money at a problem and expect it to resolve itself. But that's exactly what legislators are doing with the capital gains income tax and all the other taxes they use to fund an education system that is falling behind despite record spending. And they're doing it at the expense of innovators and small business owners today, but they've already laid out a pathway to expand the tax to everyone. Don't fall for it. Tell Olympia we've had enough of their half-truths. The job of the legislature is to make people's lives easier, not find new ways to take more of their money to spend on programs that aren't working. People shouldn't be taxed for their success, and small businesses should be incentivized to bring their companies to Washington state, not worried about how much they'll lose to our tax system. I-2109 protects businesses now and you into the future. This November, vote for Washington state entrepreneurs. Vote yes, pay less. Together, we'll fix what's broken.